Ever wonder what financial advisors have to say about money goals, the market, or economic issues? If you have, then this podcast is for you. Behind the Designs gives you a sneak peek into the internal conversations at Financial Design Studio. Michelle Smollenberger, a certified financial planner and the CEO here at FDS, will be your host and guide. Welcome to Behind the Designs.
All right, we are back with another episode of the podcast, and today I'm really excited because I have Rob Stoll with us, who is our Chief Investment Officer here at Financial Design Studio, and Rob has a really important role, and he does an amazing job, and we're just really going to talk through the importance of investment management, but first we're going to get some backstory. We want to understand why this matters, and so today's episode we've called Not a Flaw, but a Feature, and this really came from client conversations probably a couple years ago. And in this conversation, this is exactly what Rob said. And I said, that is a phrase that we need to coin and we need to say. So we're really going to explain that. So Rob, why don't you just give us a little background on how you got into investing, your experience, what you've been doing up until now?
Yeah, sure. Yeah. So I'll give you the short version of a very long story, but basically ever since I was in middle school, any of our older listeners out there, you might remember the show Family Ties, and Alex P. Keaton was really big into the stock market and all that, and I was just enthralled with it. So I became very interested in investing at a very young age and pursued that path for a long time in college and everything, and fortunately was able to get a job out of college, not exactly in investment management, but in a company that did that, and then after a couple of years of doing some side work there, was added to the investment team. So did that for about 20 years, and it was fun, very tiring, but I was ready for a career change, and becoming a financial advisor and really helping individual people and families was really important, because I had spent most of my career working with like pension funds and large institutional investors, which is fine, but you really get to see the impact when you're dealing with real people and real families. So, yeah. Yeah,
so a big pension fund. So employees who have a pension, all this money goes in for all the employees into one big lump sum that the company needs to manage and make sure so that the money is there for the employees when they retire for that pension. But so ultimately it's for the people, but I'm sure where you were seated, you see a big lump sum of money that needs to be there. There needs to be certain amounts by certain dates. And so now you get to see a front row seat of this is the person this is impacting. And okay, I know what they're doing to make sure the pension's there because you've seen that side, but now you're even more so personalizing it.
Yeah. I mean, the pension, like pension funds, you're 2 or 3 times removed from the actual people that are using the money. So you don't really see it or feel it, or you can't really think about the end person who's depending on that. Whereas with being a financial advisor and doing investments, you're working on financial plans and investing people's money, and you see the result of that as you do plan updates each year and track their progress. So it really brings home how important it is to get the investment management part of your plan right.
Yeah. Okay, so take us back to young Rob, the young investor Rob, middle school, high school. Walk us through, did you get chances to start investing? Were you one of these that started early, made mistakes, got it all right? Walk us, tell us about young investor Rob.
Yeah, so, I had in college, I had a couple of opportunities in classes to do, fake I don't want to say fake investing, but kind of like you're not really investing. That was interesting because it gave me experience in how to look at companies and analyze them, but it wasn't until I got my first job in 1997 that I actually had money to invest. So up to that point, you're scraping by paycheck to paycheck and all that, and I finally had money to invest, and it just so happened that it was right at the tail end of the tech bubble in the late 90s. So, I'm watching all my coworkers and friends making all sorts of money and all that, and I start throwing money in the market like crazy. And it was a good learning experience because, as we all know, the tech bubble burst. And, I watched money that I had made, that I had put in the market, evaporate very, very quickly. And almost at the bottom, I just capitulated, and I'm like, I have to get out of this stuff, and I sold everything. So to this day, I still have an IRA at TD Ameritrade with 1 cent in it because everything I had put into it, I lost because a lot of companies went bankrupt and all that. But it was a really good learning experience that, you go through a cycle like that. If you're selling at the bottom, you are locking in losses for life. So that really brought home to me the importance of managing your risk while you're investing, so that when you go through a downturn like that, you're not faced with a choice of, I have to get out at all costs.
Yeah. Now, Rob, something you said, so you mentioned, wrote it down and you sold, got out. And I hear a lot of investors say, I've lost so much money, I'm losing so much money, but you only lose when you sell. Or if companies go bankrupt. So that happens. So if you stay in an investment, you buy and hold it forever. If it's not a good company, if you're investing in a specific stock, then it is possible it can go to zero and you actually have lost it. However, it is possible too. The markets go down, they come back up, and then we go through cycles like this. So I remember even 2007, 2008, where people would say, I've lost so much. And we just tried to remind people that you've only lost it if you've sold at the bottom, or you've sold and locked in those losses. So it is really important, just really in the mindset of what we're thinking of, wait, I still, yes, it's gone down, but the market comes back up too. So just that important distinction, but you said it really well because that was your experience. You did sell.
Yeah. And I mean, that's, at the end of the day, that's our job, is to help guide people through those downturns. You have to, when you're investing, you have to understand that cycles are a part of the business. So if you know that going into it and you go through a cycle, you're not going to be selling at the bottom because you understand that we'll go through bear markets. They're going to look really ugly and all that. But if you've done a good job of managing your risk and being well diversified, there's no reason for you to sell in those moments. You just hang on, continue to manage your risk, and markets will come back. I mean, we have 100+ years of history that we've gone through depressions and wars and pandemics and the whole bit, and markets have always come back. So, that our job is really to kind of manage people through those downturns, because those are the hardest moments for most investors.
And those are scary times. So I think as an advisor, we never want to belittle what people are really feeling, and even what we're feeling as individuals going through and having money invested and trying to live life and earn an income. We never want to belittle those feelings because they're real feelings you have as the economy is cycling and as the market is moving. And what I think we've seen over the last several years is that investors, we want control. And when the market is volatile, we don't have control. We can't. So we're grasping for something. And I think what we have seen is that this leads people to say, what can I do? And maybe they don't say this, but their actions are like, what can I do to actually have some control and to feel in control? And so how we've seen this play out is that people want to take action. And so this can look like selling at the bottom, buying at the top, actually taking action to buy or sell, maybe at the right time, maybe at the wrong time. We don't know, and we don't pretend to know, that nobody knows what tomorrow is going to bring, but people want to have control, and so they take action. And sometimes, this can lead to big problems. And so this is where we kind of want to talk through this, because this is exactly where this conversation came from, was, wait a second, we can't be in control, and we need to really step back and not just do something. So how have you seen this action, I need to do something, I guess this behavior, can you describe it, or any experiences where you've seen that?
Yeah, I mean, we've had a lot of cases just in the last couple of years. So if you think about March of 2020, the market went down 35% in a month. And we're looking at a pandemic. We haven't dealt with one of those in 100 years. And we had people saying, hey, we should be doing something. This is a once in a lifetime terrible event, and we need to be doing something. It's selling or doing whatever. And as we know in hindsight, we know that selling in March 2020 would have been the absolute worst thing you could have done, because the markets roared right back and hit all-time highs. Flashback just a year ago with crypto and Bitcoin and all these other coins out there just going through the roof, and people are making money. And I can't tell you how many emails I got from people saying, hey, what about Bitcoin? What about crypto? Why don't we invest in this stuff? And it gets back to that old saying that Warren Buffett had a long time ago, where the key to success in investing is to be greedy when others are fearful and fearful when others are greedy. And we really, really try to do that because when you get those extreme moments, both on the upside and the downside, the inclination for a lot of investors is, I have to do something. And, more often than not, doing something is the wrong thing to do.
Yeah, because it's a reaction. I'm reacting to an emotion, usually a fear. I'm scared, I'm nervous, I'm worried. Instead, and so in these conversations, this is where we said, clients were asking these questions. And so together we're having these conversations, which again is why we're doing this podcast, because we're like, we need to hit record. Like, we need to record these conversations so people can hear it and really just have perspective. And so the thought, like when we were talking through this, was, wait, this is not a flaw of our service. So our inaction in these times when it's easy to want to do something, this is not a flaw, but a feature of it. Because we were thinking before then, is there anything, how should we be positioned? How should we be diversified? We had just had a client event where we're talking about being diversified, the importance of it, showing historically how this helps. And so it was just a reminder of, wait, like, we are doing things. It might not be in the moment, so it might not feel like it, and so they don't have that feeling of control, but this is a feature of what we do. It's sometimes even protecting clients, we say, from themselves, because I would even naturally, if I'm managing my own money, I would go to take action because I'm fearful. I don't have someone to bounce that thought off of. And so I think as a team, this is really where we help our clients, because we're having these conversations all the time. So when you said this, it's not a flaw, but a feature, I was just thinking, yes, that's exactly it.
Yeah, and I mean, where that saying really comes from, or the context of it, is this year. I mean, we're sitting here in October 2022, and we all know inflation has been terrible. Markets have been terrible, both stock and bond markets, and we've gotten a couple emails from people that, what are we doing about this? What are we doing about this inflation problem? What are we doing about this, the Fed hiking interest rates and things like that? And my response is always, we don't try to time markets. I think a lot of advisors out there don't do a really good job at investment management because they've convinced themselves, well, we can't time markets, so we're not going to do anything. But I don't think that's the right way to approach it. I mean, we can't time markets, but we have to have a view on what is going on in the world, because, like it or not, that influences what is happening with the investment market, both stocks and bonds. So we get questions, Rob, inflation is 8.5%. What are we doing about it? And my response to them is, we did something a year ago. We were writing about this starting in late 2020, that inflation was going to be a problem. And all through 21, that inflation was going to be a problem, and we took action on that. So what did we do? We reduced interest rate risk in bond portfolios for clients. We better diversified some of our stock holdings in the U.S., like large U.S. Stocks. And we took those actions a year and a half ago, late spring of 2021, when the markets were still roaring, inflation was low, and none of that was a big deal. You really have to, while you can't time markets, you really do have to understand what kind of environment we're in. And you have to, to the best of your ability, anticipate where things are going. I have one of my old bosses used to say, if it's news to you, it's not news.
Yeah. Yes.
And what he meant by that was, if I'm reacting to news today that's coming out today, it's already in the market. The time for me to act was not on the day that the news came out. The time to act was 6 or 9 months ago, thinking about the future, what might things look like? And so that's what, sometimes I think when we go through these moments and maybe clients aren't seeing we're trading willy-nilly in reaction to whatever the market's doing, it's because we already did these trades a year ago.
Yes.
And so anything we're doing today is not in reaction to today's news. It's really in anticipation of what we think the world might look like in 6 to 9 months and what investments would do in that kind of environment.
Yeah, no, that's so great. And we're going to talk about that even more in our next episode. We're going to dig into some of those actual, like our investment process and some of these specific moves that you're talking about, because it will really help to explain what you as an individual investor likely don't know. And so we're going to dig into that a little more. I want to say this a little bit different way. So in this reaction, I have to take action. Something I heard recently, when we properly understand investing, it can cause and it can bring patience and calm. Like we can actually respond with thought and we can say, okay, this is my plan, this is my process. I think investing poorly understood or not understood brings this impatience and this anxiety. So when you don't understand what you're doing, when you're trying to self-educate yourself, and there are so many resources out there, so it is possible to do. You can try your hardest. But this is where, with experience, you have seen things that an everyday investor has not seen. You have seen, what you own in a fund, that is not just one stock. You know that there's things that you need to know about that. And so there's just pieces where we have to understand. And this is really why, for our clients, it's such a big deal that we are educating, that we write blogs, we do videos, we're doing this podcast. Because when you understand, when you're educated, you can actually have that sense of calm. You can actually feel like, oh, I know why we're doing, I know what we're doing, like I know those reasons. And so it brings a very different mindset. That's the biggest thing for us, is that our clients can trust that we're doing this for them so they can go live life. They can do what they want to do, and we'll manage and we'll deal with all of these specific things. And so that's, this is it kind of brings all of that back to this proper understanding.
Yeah. And I like to use the example, for the last year or so, I've been trying to lose weight and get myself in better shape and all that. And I mean, the internet is a blessing and a curse because there's so much information out there. Yeah. But man, I mean, for anyone who's tried to lose weight or eat healthier, the amount of information out there that is conflicting, and one blog says eating a lot of eggs is terrible for you. Another one says, oh, that's the key to losing weight. And, all these different things. And, there's almost like information overwhelm. And what happens when you have so much information and when that information conflicts is you end up in a position of paralysis where you don't know what to do because there's so many different ways to do it and you're not really sure which way is the best way. Just very recently, I have found a personal trainer. We talked a lot beforehand about nutrition, their approach to doing things and all that. But most importantly, explaining the why behind all that. Why do they believe that this is the right way for nutrition and all that? And that's really what we try to do. We try to explain how we manage investments ahead of time so that when we go through these moments, people can have confidence that, I'm doing the right thing. So, going back to the health thing, just this morning, I met with my guy. I weighed in. I did not lose any weight at all. And I'm on week 3 of working with this person. And I'm like, I'm here to lose weight, not stay stable. And he's like, well, look at all these other things. Your muscle mass is up, your body fat is down. So there are things happening. And, just that kind of encouragement and knowledge about something that, frankly, I don't know anything about is enough to keep me going. So it's like, okay, we're going to keep going, and just trust that it'll all work out in the end.
Yeah. And I think that's important too. So, when a new client comes in, so first off, I will say, are we willing to say, I don't know everything? I think that can be a really big step for people because, when you're investing money, when you're trying to just grow money and you're working, you're just adding to it, when the market's going up, it's just growing. Everything's going fine. It's in these hard times where, you don't know what's happening and you don't know what you should be doing. Those are the times where it causes this panic and that action that you take because of it could change your plan forever based on what you do. And those are the times where we're really trying to save our clients from taking that action and saying, we're going to do this for you. I think leading back to your example, everyone is so different too. So, every investor has a different time horizon, different risk tolerance. We're investing for different goals. And so your example is perfect because, we want to see results. And for the results for the long term is, can I reach the goals? Can I do what I want to do? So that's really important for us to understand and for investors to understand.
Yeah. And I mean, look, we don't have all the answers. So, when I say take a view on what's going to happen in 6 to 9 months, I could be perfectly right. I could be completely wrong. And that's why it really takes a healthy dose of humility to be successful in this business, because it is really easy. And I've seen it hundreds of times where people get really, really dogmatic in a view about the markets or about the economy, and when things start changing, they're too stuck in their way to admit that. So when we express our views in client portfolios, we're not moving the entire portfolio into one thing. So I wrote about this probably a year and a half ago, and we first started talking about inflation. It's like, look, we're going to start moving some of your bond exposure into inflation-protected bonds. We're not doing it all, because if we're wrong about it, then, you're worse off, and we don't want that. But what we do is we have these views and we tilt portfolios in that direction so that you're at least capturing some of that. And if we're wrong, you're not overly hurt by that either. So it really does take a little bit of humility to have a view, but not get too stuck in that way either.
And I think too, knowing, so our philosophy, so when a new client comes in and they say, I don't know how to do this, they're essentially saying, I need help. When you reach out to your trainer, you're saying, I need help from someone who knows what they're doing, someone who's trained in this, has experience and knowledge that I don't have. That's essentially what clients are doing when they come in. And so we always say, we're not here to judge any of your past decisions. We're not going to say, well, you really messed up there, or you really got it right there, way to go. We're going to encourage you where there's encouragement. We for sure want to do that. But our place is not to judge you. It's really just to say, from today forward, here's what we're working with, and here's what we're solving for, and here's where you want to go, and we want to help you go there. We're your guide along the way. We don't sell, any guarantees, anything like that. Like, we are your guide for the road, and we are going to help you based on our experience and knowledge to help you reach your goals and make those changes as we need to. And sometimes that's once a year. Sometimes that's 5 times in a year. Like, we don't know what the market's going to do. We don't know what the economy is going to do, like you said. But with our experience and knowledge, we're guiding people and making changes as needed.
Yep. Yeah. And I mean, details matter. And I hate to keep going back to the personal trainer thing, but before I started working with him, he's like, here's some exercises you can do at home. Watch these videos and do it. So I was doing some of that. And then when I started working with him, he's like, all right, we're going to go do those exercises. And I started doing them, and he's like, oh, no. Your body is positioned completely wrong. Your core isn't the way it needs to be in order to do that exercise and all that. So I was able to, quote unquote, do these exercises on my own, but I wasn't doing them well because I didn't have somebody there to tell me, the small details of, like, if you just move a little bit this way, you'll get a lot more out of it. And I think with investing, there's so much of that where it's there's a lot of belief out there, and I'm not like poo-pooing the idea of passive investing and buy and hold and set it and forget it or anything, but there's so much money to be made from being tactical with how you kind of do things, make certain changes here and there as markets start moving around, taking advantage of market movements that for most people, they're not going to do that because we're too busy and we don't have time to follow it. We don't have time to anticipate the moves or anything like that. So, so it's just the details really do matter, especially with investing where little mistakes or little wins can compound to very big numbers over 30 or 40 years, depending on your time horizon.
Yeah, exactly. No, I think this is just so helpful to put it in perspective. And I just remember a couple of years ago when we were having this conversation and we were really talking about, when clients just want us to do something and why aren't you doing something? And I just love how, you're always looking forward, and looking forward isn't, well, at the end of this week, we're expecting this, or at the end of this month. It's looking forward a year, 2 years, 3 years, 6 months. It's looking forward to say, what do we expect to happen? Based on that, then how should we be invested? Should we make a change or should it just stay the same? Because sometimes the answer might be stay the same because we're already diversified. But these are pieces where this thoughtfulness is so helpful. And I see, and as we were talking about it, I can obviously see where this is a feature, not a flaw. But I think sometimes we feel helpless and we feel like, oh, I'm messing up because I'm not doing something. So
yeah. And I always like to say, the way we really invest is really two pieces. It's having that view, what is the world going to look like in 6 to 9 months? So as we're recording this right now, we had the government reported terrible inflation numbers, markets are down a lot. The temptation is to sit there and say, we need to do something to combat inflation in our portfolios. My personal view is, as bad as it looks right now, if we're thinking ahead 6 to 9 months, the way the Fed is going, raising interest rates as quickly as they are, in my mind, it is highly likely that they're going to hit a breaking point where something breaks in the market or stocks go down a lot, and they're gonna back off. And the moment that they back off, long-term bond yields could come down a fair amount, probably not down to what they were in 2020, but they could come down a lot. So, when I see news like we're getting today, really bad inflation, I'm not reacting to that. I'm thinking, okay, this is just another piece of evidence that the Fed is going to have to keep tightening very, very quickly. We know based on history that when they do that, something eventually breaks. There's a crisis of some sort. And we know that when that happens, they back off and they either start cutting rates again or, helping the markets another way. So, just putting on that thinking cap of 6 to 9 months from now, that's, we'll see how this sounds in 6 to 9 months.
Right.
But I would suspect we're probably looking at a very different environment than we are right now. The second piece of it is, in terms of how we manage money, is we really take what the market gives us. So we're not like we don't have our finger on the trigger or anything ready to do trades just for the sake of doing trades. We see what the market does. If there are parts of the market that sell off a lot that we think, in 6 to 9 months those might be areas of value, we would take advantage of that. Or if things are really going up a lot and we're looking at the world, and a year ago we were talking about this, looking at a lot of the big tech growth stocks like Tesla and Nvidia and things like that. And it's like, if inflation hits, these stocks are doomed. And, but they kept going up. So it's like, all right, well, let's make some moves to take money out of that part of the market specifically in anticipation of inflation going up and the Fed hiking rates and seeing what we're really seeing right now. So it's just taking what the market gives you as well.
Yeah. So even with that, kind of giving a little perspective of like the 6 to 9 months ahead, I can even feel like I could see people even reacting to what you're saying and saying, whoa, like, you mean it's going to get worse? I can see people like starting that anxiety or worry starting to rise. If that's you, if you feel that way, this is exactly what we do for our clients. So it may be time to say, maybe I don't know everything with what I'm doing. Maybe it is time to actually have that conversation to say, do I need some help? And, and so it's okay. Like, that is what we're here to do. So we love doing this for our clients. So thank you so much for sharing all of this, Rob. This has been so helpful. I have to say, though, since you've been talking about your trainer, I'm like trying to sit up better. You can't see this on the radio, but I'm like, wait, I feel like I need to, like get my core activated here.
Yep.
So it's kind of funny, but all of this, it really does in different areas of our life. We could all think of that personal trainer example in so many different ways. And so this is where this really matters. We're really trying to help. And these are the features of what we do.
Yeah, exactly. And it's like I say all the time, we have so much knowledge. And, I remember when I was investing at my old job and all that, and I'm like, what the heck do I need a financial advisor for and things like that. After I became a financial advisor, it's like I didn't know jack squat about backdoor Roths or, some of these other strategies to save money, save taxes. So even though we're in the business, or even though you might have expertise in something, as I say, it's the key to investing is really to be humble and to know, I don't really know exactly what I'm doing here. So just finding that person, just as I found that personal trainer, just finding somebody you trust to kind of take care of that for you. And that's really what we try to do for clients, is we try to be that firm, that team that is there for clients. We're taking care of that. You got a busy life, you got a career, you got kids, the whole bit. You worry about that, we'll worry about this, and we'll keep you updated the whole time so that you know what you're doing. So we're not just like, give us your money and we'll talk to you in a year. No, we're writing blogs, we're writing special emails, we're doing stuff like this. So
exactly. It's that education piece, so that even when someone's doing it for you, you can feel the calm, you can have that patience and understand what's happening for you. So this has been so great. So thanks for joining us.
No problem.
And
this has been fun.
We're going to continue this conversation in a part 2 because this is so important, and we needed to break this up or it would get really long and really technical. So if you've enjoyed this conversation, please go on over to our next conversation in our next episode, where we're going to talk about, is buying and holding investing debt. So we'll see you there.
Thanks for tuning in. If you like what you hear in our podcast, please subscribe. We release new episodes every other week. And quick note, the content discussed on this podcast should not be taken as financial advice. Financial Design Studio accepts no responsibility for your individual actions or choices. But for more information about Financial Design Studio and who we are, check out our website, financialdesignstudio.com. We'll see you in the next episode.